Well, indices globally have been under pressure since, yes, in fact, since Monday when I'm looking at it. Of course, US indices had a holiday on Monday, under pressure on Tuesday as well as Wednesday. When I'm looking at largely the concerns, well, one is, of course, inflation continues to be one of the concerns. Second is the Federal Reserve, continuing its commentary on rate hikes as well as a withdrawal of liquidity. And when I'm looking at even job openings and the general economy, there seems to be concerns around that. In fact, jobs have fallen sharply from 11.9 million job openings in March of 2022. That number has come down to 11.4 million in April of 2022. And of course, oil prices rising continue to pressure inflation, and all three US indices closed lower under pressure. The Dow was down over 0.5% in trade, the S&P 500 down 0.75%, and the Nasdaq also down around 0.75% or so. In fact, couple of other comments which have been made. One is JP Morgan's Jamie Dimon has said that there is a storm coming and that JP Morgan's balance sheet is bracing for an impact of that storm, largely on the back of the general economy slowing down. In terms of other commentary, the Federal Reserve, both members from the dovish camp as well as the hawkish camp have been pretty much there's a consensus on both camps that rates have to go up and inflation must be targeted. Moving quickly on to how the EU is looking, well, inflation fears are continuing to pressure stocks in Europe, and major indices in Europe closed lower. The DAX was down around 1/3%, the FTSE down almost 1%, and the stock 600 down just over 1% in trade yesterday, and that meant that there was a weak handover to Asia today. Clearly US as well as Europe down, and Asian indices have started quite under pressure in early trade today. When I'm looking at the Nikkei, it's down around 1/5% as we speak. The Shanghai down around 1/10%. Mind you, China is reopening, and despite that, the Chinese indices seem under pressure. The Hang Seng also down over 1.5%. The ASX 200 is down around 0.9% as we speak, and so is the Kospi. So largely that's how the Asian indices are looking. The SGX Nifty on its part is down around 0.5% in trade today. In fact, it's shifting between that 16,400 and the 16,450 mark. That's where it's moving around at the moment. So the SGX Nifty clearly under pressure in early trade today. When we're looking at how commodities are doing, well, oil prices, that remains in focus. Oil saw a bit of a spike early this week. However, that's leveled off after the Saudis have stated that they will increase oil production if oil production in Russia comes down. Oil production in Russia will come down if EU stops sourcing its oil from Russia. So that will again be one of the key focus points with regard to oil and where oil prices are headed going forward. Of course, inflation worries as well as the Fed rate hikes are worrying investors, and gold as a safe haven is making a bit of a comeback. Gold, which fell around 1% in trade yesterday or day before yesterday into yesterday, has gone up by 1%, reversing that loss. It's come back to around $1,850 an ounce. The dollar index has also made a quick recovery. It's above that 102.5 mark. When I'm looking at how the 10-year bond yield is doing, the US 10-year bond yield is also headed slightly higher on the back of course, inflation concerns and Fed rate hikes as well as liquidity withdrawal. All three of those pushing the US 10-year bond yield higher to 2.91% now. And cryptos have come under pressure. Of course, bond yields going up does not help cryptocurrencies at all. And in fact, Bitcoin is now again below that $30,000 mark. That's where we started. Currently, negative cues from Asia and India seems to be opening lower.